Well, I think like you've just been hearing, we are in a unique situation in European energy markets, given the Ukraine crisis, as well as shortages of nuclear output and hydro output across Europe. And power prices have been pushed to extremely high levels, and the politicians are looking to step in and take some of the burden away from consumers. So we're hearing about the price cap that is likely to be discussed and established later today. That is got to be set at an appropriate level, and by appropriate, I mean a level that still encourages investment in the system, in renewables, in grids, because we need to make sure for the longer term that the energy transition remains on track. But obviously, politicians need to do something to take some of the higher costs away from consumers. And I think they're discussing a level of maybe 180 to 200 euros per megawatt hour. And that will help relieve some of the burden on end users, and will be significantly below where wholesale power prices currently are. So I think it will serve both sides of the argument in terms of preserving the longer term, but doing something to intervene in the shorter term.
John, it's one thing to talk about a cap on revenue and targeting some of those big producers that have been around for many, many years versus, say, renewables, where we know it's not been an easy journey. Getting to profitability has been a struggle for many of these particular parts of the renewable space, let alone investing for the future and getting to scale. What do these measures potentially do as we talk about the trajectory for renewables?
Well, as I say, I think the level needs to be high enough not to discourage that future investment. I mean, I think European politicians have been very clear that the answer to the crisis is not to deviate away from previous policies, but to accelerate the investment in the energy transition. As I said, we need more renewable capacity, whether that be offshore wind, onshore wind and solar, but equally we need to invest in the grids and also in battery storage and potentially hydrogen over the longer term. So the price level on a cap, I think if you were to speak to the utility companies, they are obviously concerned around what level that's going to be, but they are also cognizant that they also need to be part of the solution. So taking some of the heat out in the short term, I think is a sensible option for all, provided it doesn't discourage future investment.
John, I'm about to go all red top on you. I apologise in advance, but look, we're talking about investment versus windfall tax here, but you know it's more sophisticated than that. Let's go 3D. It's about shareholder returns, investment and windfall tax as well. Have we made a big mistake with our energy security by having, and here I go, privatised utility companies in the UK and elsewhere, when actually the state would be the better guardian of that investment and we wouldn't have to pay shareholders?
Yeah, look, big question there. I think what we've seen over the past couple of decades of private ownership of a number of the utilities is a significant investment. I think the companies have made difficult choices to invest in technologies when they haven't necessarily been showing the best returns. We only have to go back to 2 or 3 years ago in the wake of the COVID crisis, and we saw power prices at pretty much all-time lows. And I didn't see anyone coming to the rescue of the utility companies and the energy companies in those days. So, look, I think it has to be a balance here. I think private investment has been significant in all parts of the value chain. And I think the politicians realise that the state can't take all of the burden of the investment, as well as bailing out energy companies, as well as helping the consumer. And it needs to be a balance between the private sector and the public sector.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.